Everybody, the time is here. We've been talking about supply and demand. Well, here's the story. At the end of June, prices are up and inventory is way up. What's this mean for Denver and the suburbs and our real estate market? I'm diving into all of that in this month's Denver and the suburbs real estate market update. So let's go. What's up, guys? I'm Jeremy Kane with eXp Realty and living in the Denver suburbs. I am here to talk to you about the market, and we've been talking about the market for a long time, and I talk about supply and demand and how it's all correlated and all the things. Well, I'm here to tell you right now, we have an anomaly. Interest rates up, inventory up, and prices are still going up. What's that mean? We talk about this all the time on this channel, and I hope that you will click that subscribe button so you can stay informed, so you can make the best decisions for your wealth in the real estate world as you buy and sell real estate. I would love to be your trusted source of information. And if one day you decide to purchase a home or sell a home, I'm the guy. I would love to chat with you and throw my hat in the ring and tell you exactly what I do to get sellers top dollar and negotiate my tail off to get buyers the best deal possible. But for now, let's get into it. So we must go to the headlines. We must talk about all of this because the truth is there's a lot of uncertainty, not to mention the political world. We're talking about in the real estate industry. We're looking at articles from the Wall Street Journal that says homes are valued on average 25% more than they should be. The housing cost to income ratio is 44%. But we're going to say at the end of this article, after we give you a big scary headline, that home prices are pretty much high permanently. And that's exactly what's going on. The cost of everything is going up. And the Wall Street Journal at the end of this article kind of entails that the prices are permanently high. Next, we'll go to that Realtor.com article. Denver is the third most likely market for a price improvement behind the state of Florida and the state of Texas. And this is something that's concerning because Denver is not a state, it's a city. So what are we looking at? What did they base this off of? Well, they based it off of high inventory, number of price reductions, and everything that's going on in the market, which we're going to talk about more. But at the end of the day, Denver remains a hotspot for people to move to, travel to, and get jobs at. So what's that mean? And certainly we have seen an amazing appreciation run here in Denver. And with these high inventory rates and with the rates coming up, days on market going up, you would think that there may be some sort of price improvement. Here's what I'm going to tell you. Historically, the second half of the year, the prices do always tick down a little bit after a big run in the beginning, typically averaging out somewhere between 4 and 6% appreciation by the end of the year. We will not see that big of an appreciation number this year due to the high interest rates and the slow demand. However, this article is saying that Denver is likely to see a price reduction in the coming months. Well, absolutely. That happens every single year if you're looking at the second half of the year versus the first half. But with that said, we had an average price increase of 0.8% month over month, and the median home price is up 1.5% month over month, which is absolutely mind-blowing because when I get into this inventory idea here, we're up 11.5 month over month at the end of June. And year over year inventory is up 66%. But let's talk about this. Compared to 2019, our last normal year in real estate, and what we compare a lot of things to, our inventory is only 7% higher. So don't flag the alarms. Don't get crazy. The truth is that we are just normalizing. It just feels like a rapid slowdown in our market because we are coming off one crazy 5-year run. And certainly interest rates have been higher. We still fought through that for a while, and now we're kind of flatlining and it feels like we came to a dead stop. That's not the case when you look at the historical average. We are just getting more normal. I talk to my agents all the time about we just need to get used to having homes that sit on the market a little bit longer with days on the market in in our heads, let's talk about 2019, 30 days average on days on market, right? 2022, 11 days on market. That's not normal. That's coming off the pandemic, crazy times. 2023, 32 days. So 2024, we're way slower. Everybody feels it. There's, political turmoil. We don't know what's going to happen with the election. We don't know a lot that's going on. There's 3 possible world wars starting. All of those things. 35 days on market. So let's separate ourselves a little bit from that climate and understand that we are actually pretty normal for this month over the last, the last normal time, but even the last couple of years, we're just ticking up slowly. But when we go to those attached homes, 82% increase in inventory in that sector. But when you really step back and look at it, we have to understand that there's so much going on in that attached home environment with the higher HOAs, the lower approvability with those HOAs on the lending side. And so attached homes are taking a little bit of time to get moved, more so than those single family homes, as we continue to have that affordability crunch. Now, with them, you're adding interest rates, prices, and the HOA increase due to insurance costs and taxes and so on. So the attached homes actually are 38 days on market. So we're still, right in that realm. It's just taking a little bit longer on those because they're less affordable than they used to be compared to those single family homes where you get a little bit more buying power when you remove that homeowners association. So what does all this mean? Sellers, you must heed the advice and understand that there are more homes to choose from. So we must really dial in those pre-listing activities. We must make the home ready to go. The truth is that the buyers are asking for more on inspection anyways. So those major items we may want to take care of on the front end so that someone can walk in. We increase our buyer pool because buyers are being picky. This is a good thing on the buy side. We'll talk about that in a second. But because they're being picky, let's make sure that it's not a home that they have to do instant improvements on, if at all possible, right? I'm not saying redo everything, but if you are going to transfer a home that has, repairs needed and so on, and they're there, you're actually going to lose money because you're going to take some of the interest out because some people walk into that home and say no because they have more to choose from. On the buyer side, we need to really focus on being picky and being choosy and taking advantage of the opportunity. Definitely negotiate those seller buy downs if at all possible. And when you really get down to it, make sure that you are choosing something that you can live in for longer than 3 months. We're not buying this home to sell in 3 months and make a quick buck. This is a long-term investment. So certainly, maybe you are buying the home at the top of the market, like that Wall Street Journal article said. However, it's the top of the market is right now every single year in the Denver market, as typically home prices slightly decrease as we finish out the year. And then here comes spring 2025 with the hope and dreams of lower interest rates could boost right through that little drop you might have, and you will benefit from the further increase when that happens. So take advantage of this time. The next 6 months is your time. Do not sit on the sidelines, because if you are sitting on the sidelines waiting for the prices to come down and the interest rates to drop, the second that both of those things happen, there's going to be a rush to the market, because a lot of people are thinking just like you right now before you started watching this video. I'm going to sit on the sidelines, wait for those price drops and get in. And I'm here to tell you, renting might be a little bit cheaper for the time being. However, for the long-term wealth, this is your opportunity to get in and be on the flip side as a homeowner when the market does increase rapidly, when those rates do come down. There's a lot of things that we're looking at in a broader context of the market. There's quotes all over the place, right? We have Lawrence Yun talking about there's still a national housing shortage of 44.5 million homes. This is coming. We have the future demand of millennials and Gen Zs. 97% of Gen Zers want to be homeowners. And this is when that wealth transfer that we've been waiting for is going to kick in, because several of those Gen Zers, some of those millennials, are even going to purchase their next home with a gift from a family member within that wealth transfer as that begins. So that's exactly how they're going to afford it, is have that wealth transfer, have those gifts, and be able to get into this market. Therefore, there will be more people coming to the market because those are such large groups of our population that want to make it happen and have the American dream of home ownership. When they come, they're going to come. It is what it is. They'll make it happen. And we have to understand, as people in our industry, as home buyers out there, we want to be on the front end of that demand rush and not on the back end. Because if we continue to wait, we can continue to wait. Eventually, you in your career with your income opportunities will be priced out of a market like Denver. And we absolutely don't want that to happen. If your time is now, let's act, let's get into it, and understand that job growth and prosperity and, all things Denver make Denver an absolutely amazing place to be. And we're going to invest for the long term. If at some point you do want to move, you can hold it as a rental. Denver also has an extremely strong rental market, as we do have typically migrant increases, as we go. People are migrating here, not necessarily talking about immigrants and that kind of stuff. That's not for this video. But this is what happens. People want to be here. So in the event you do have to move and the market conditions aren't perfect for you to sell at that time, you do have the opportunity to rent it. You should be able to cover your mortgage as you take opportunities to refinance when those rates come down. And we should be on our way to extreme wealth building in this market. So if you have any questions, if you want to chat, please book a call below. I can't wait to continue to talk to you and help you and be a part of your story through building wealth through real estate in the Denver market, or truly across the country, as I have colleagues all along the, all in the US, Canada, wherever you want to go. I am able to be a part of that story and refer you a great agent. So I hope that helps. I look forward to talking to you next time, and we'll see you next time on Living in the Denver Suburbs. Bye-bye.